Okay. So as I mentioned, we're gonna to talk about two types of statements. We're gonna talk about the financial position statement and the income. The financial position statement, if you remember, we talked about those statements, and the income statement. So a financial position statement, it will rely on the accounting equation. Asset equal liability plus equity. Yes, correct. So this is the accounting equation, which is asset equal liability plus equity, and that is what is the statement for the financial position rely on. So the items of the financial position statement are assets, liabilities, and sure we have owner's equity. So the second financial statement we will talk about it, the income statement. Income statement, we will put in it the income and the expenses. And when we deduct the expenses from the income, we're gonna to reach to the profit. So those two are the main financial statements, which we're gonna to learn what are the items in each one of it and how we can arrange to make the financial statement. So financial statements are two key elements to the financial statements of a sole trader business. First is a statement of the financial position, as we said, showing the financial position of a business at a point in time, and the income statement, which it will show the financial performance of a business over a period of time. The financial statements show the effect of business transaction, that what we have learned in our first class for this topic, for this subject. So sales of goods either for cash or on credit. If a sale is made for cash, then cash in the business will increase and the sales transaction will have also been credited. The cash will be recorded in the statement of the financial position and the sale will be recorded in the income statement. Here we are showing each one of the transaction where it will be recorded. But normally when you will be asked for doing the financial position, the financial statements, you will be given the numbers. You will just get the numbers itself, and then you will be asked to locate it in its place in the financial statement, either in the financial position or in the income statement. So let's start with our first statement, which is statement of the financial position. So we have two types of the statement for the financial position. We have the vertical and we have the horizontal way. The vertical format of the statement of financial position, it shows below as here. Note this format relates to a sole trader only, because normally for all the other businesses we will do the vertical one, which is we will put the assets in the left side and we will put the liabilities and equities and equity in the right side. So like this, it will be the vertical way. The horizontal way. The vertical way is we will put the assets, we will take the result, then we will put under it the equity and liability. So the vertical way of making the financial position statement, it's for the sole trader. This is what we are learning in our class. The top half of the statement, of the financial position shows the assets of the business. The bottom half will show both the capital, which is the equity, and the liabilities. This is one example about the financial position and what are the items located in each one of the parts. If you see that this is the top half. Okay, so this is the top half. And this is the bottom half. So the top half, it has the assets. And bottom half, it have liabilities and equity. Okay, so those are the items for both half of the financial position statement. First, we'll put the asset, and we're gonna to divide the assets to based on the categories as non-current assets and current assets. For that, these are the equity. With all equity items, the capital, the withdrawing, and revenue, the profit, and everything. And then we have the liabilities. Also, we divide in two types, the non-current liabilities and the current liabilities. So like this, you can make the financial position statement. Okay, so this is how the financial position statement showing. As we mentioned, in the top half, you're gonna to locate the assets. You have to divide it based on the categories, the non-current assets and the current assets. The bottom half, you have to put the equity and liabilities. Also, the liabilities you need to divide to two non-current liabilities and current liabilities. When I talk about the shareholders' equity, the equity, it goes the capital minus the drawings plus the profit, right? Okay. So let's continue. As I was mentioning, those are the main items of the financial position statement. Assets, as you know, assets are the resources of an entity to control as a result of past events and from which future economic benefits are expected to flow to the entity. You know, the assets we have non-current and current. The non-current like land, like machinery, like furniture, the things which we keep using it for longer time, more than one financial period. The current one, the one which we use for the current financial period. As example, the inventory. We have the liabilities that what we owe to others. We have current and non-current. The non-current is long-term loans. The current is short-term loans. We have the equity, which we mentioned that what we owe to the owners. And under the equity, we have the capital. Is a type of liability that what we owe to the owners. It will increase each year by any new capital injected into the business and the profit made to the business, and it will be decreased by any amount of withdrawn from the business or we have lose. So those are the types of assets here explained in this image. We have the non-current and current. As we mentioned, the non-current assets which we use for more than one financial period. The current assets we use it for less than one financial period. That as example of non-current, we have land and building, we have motor vehicle, we have plant and machinery. For the current ones, we have example, we have the inventory, we have the receivables, and we have the cash. Those are the main items for the current and non-current assets. For liabilities is what we owe to others. We have the non-current one and the current one. This one is just a kind of review of previous classes because we already learned those things. The non-current liabilities like a long-term loan. The current liabilities example, we have the payables, we have the bank overdraft, we have the short-term loan, the loan which we need to pay in the coming financial period. So those are the main items, and sure, we have the shareholders' equity. As part of our financial position statement, as we mentioned, is a capital plus the profit minus the drawings. Those are the main items for our financial position statements. So when you are getting in case I get this question in the final exam, so you will get a list of items. You need to find each one of those items goes to which statement, whether it's financial position or income statement. Then you need to set it, okay? So as I was talking, we have two types of the statement. We have the income statement, we have the financial position statement. We were talking about the financial position statements. We said we have we have the horizontal and we have the vertical one. Normally for sole trader, we use the vertical one. At the top part of the statement, we're gonna to put the, what we call it, the assets, which is divided into categories: non-current assets and current assets. Then in the lower bottom part, we're gonna to put the liabilities and the equity. Equity is a capital plus revenue minus the drawings. And liabilities, we're gonna to categorize it in both non-current liabilities and current liabilities. You need to keep in your mind one point. You know, the financial position statement is relying in the accounting equation, right? And this one, it means this number, which is the total number of the assets, should equal to this number, which is the total number of both the liabilities and the equity. Okay, so this should equal to this. They are equal to each other because, as we mentioned, this statement is relying on the accounting equation. Okay. So let's move to the second part of our class today, which is the income statement. If you remember that we said the income statement, it's showing our expenses and our income. So normally for sole trader, the income coming from the sales or giving the services. This is one of the examples about the income statement. First, we will put the sales revenue. This is our main revenue in our business. Then we deduct the cost of sales. Okay. Then we have, this is our gross profit, which is the sales minus cost of sales. We will have the gross profit. Then we will deduct the rest of cost. Then we will reach to the net profit. If you notice, those numbers are between bracket. Bracket, it means minus. Okay. When we put any number in between brackets, it means is minus. So the income statement, income is increases in the economic benefit during the period of the form in the form of inflows. The expenses are coming as kind of outflows. Income statement, if you remember, we also discussed it before. It will show the performance of the organization for the financial period. The income statement is prepared following the accrual concept. Do you remember the accrual concept? That we have to put our expenses even if we didn't pay it cash. We have to consider our revenue even if we didn't receive it cash. If you remember, we do the accrual and prepaid, all of this. So based on that concept, the income statement gonna to be done. That means the income and expenses are recorded in the income statement as they are earned, incurred, regardless whether the cash have been received, paid or not. The sales revenue show the income from the goods sold in the year, regardless whether the goods have been paid for. The cost of buying the goods sold must be deducted from the revenue. This is also an important point. It's important that the cost of any goods remaining unsold is not included here. So if we have like some extra inventory, but as I mentioned, normally when I give you example or the exercise, it will be the simplest way ever. The current year sales will include goods bought in the previous year. So as the opening inventory, here is going in the details for the cost of the sales. We will be having the opening inventory and closing the inventory, but normally we will just give a specific number, which is the cost of goods sold. So as I mentioned, the income statement, you will just put the revenue, you deduct from it the cost of goods sold, you will get the gross profit, you will deduct from it the other cost, you will get the net profit. I'm going to show you another example about the income statement. Just 1 minute. If you notice in this left part, so normally when we are requested to do the income statement, you will be requested to do the multi-step income statement. So you will notice the first we have to put sales. We have to deduct from it the cost of goods sold. it's minus. So you see I put inside the bracket. What we will get the gross profit. After that, we're gonna deduct the operating expenses like general administrative, the advertising, uncollectible income accounts. So all of it we're gonna to deduct it from the gross profit. Here, if you notice, we reached our operating income is in minus, so it's loss. Then we're gonna to add the interest income or other revenue. What other revenues we have? Sorry, this one is operating expenses. Then we're gonna to add what other revenues we have. Then we will reach to the income before tax. Then we deduct the tax. We will reach to the income after tax, which is we call it the net income. So this is one of other examples about having the income statement or how to do the income statement. So first we put the sales. We deduct the cost of goods sold, then we reach to the gross profit or gross loss. Normally it should be gross profit. Then we deduct all our expenses, our operating expenses. We reach to the operating income. We add all the other revenues. We reach to the income before tax. Then we deduct the tax. Then we reach to the net income. So this is also another example how you can make the income statement, okay? This is how you can make the income statement. So, and this is our exercise, okay? So the question is, Amrita is a sole trader, has just started a small business, computer service business. At the end of its financial year, 31st December 2019, she produced the following trial balance. If you remember, when we were talking about the trial balance, we mentioned is the table which we put all the balances of our accounts at the end of the financial period. Some companies, they do the trial balance monthly. So here is the end of the year. What is required? This is the information. What is required? First, we need to construct the income statement for Amrita business until 31st December 2019. And second, we need to do the statement of financial position. Okay? So we need from this number to do two things, the income statement and the financial position statement. So I want to ask you each one of those content where it will go. Either the financial statement, either financial position statement or the income statement. We will get the answers. We start with the revenue. Revenue, where we put? Just tell me, financial position or income statement? Revenue, income statement, good. Revenue is income statement. Very good. Then we have sales return. Sales return. Sales return. Where we put the sales return. Income statement, good. Where we put the cash. Where we put the cash. Where we put the cash. Financial position or income statement? Financial position, correct. Cash is financial position statement. Okay, where we put the opening capital. where we put the opening capital, financial position statement or income statement? Financial position statement. Good. That is correct. Where we put the salaries. Where we put the salaries. Income statement. Good. Where we put the trade receivables. Financial position or income statement? Where we put the trade receivables, financial position or income statement? Financial position. Perfect. And also the trade payable will be same, the financial position. Where we put the expenses. Where we put the expenses, the financial position or the income statement? Income statement. Good. Expenses, income statement. Yes. Where we put the fixtures and equipment. Where we put the fixtures and equipment. Financial position. Correct. What is left? Bank. Yes, financial position. Also the bank. Financial position. Then the last thing left is drawings. Where we put the drawings? Where we put the drawings, financial position or income statement? Financial position. Good. Drawings is financial position. So to solve this type of question, in case you get something similar in your final exam, you need just to figure out each one of those where it go. Then you set up the statement. So let's go down to see how the statement, the question first, construct the income statement for Amrita business at 31st December. So this is the income statement. First, and as we mentioned in the income statement, first we put the revenue minus the sales return. We get the net sales. We deduct from the net sales the expenses and salaries. We reach to the profit for the year. Okay. So first, as the income statement, first we put the revenue. We deduct from it the sales return. Then the result, after we deduct the sales return from the revenue, we call it net sales. Okay. Then number 4, it will be, we have to deduct the expenses, then the salaries. Okay. So after deduct expenses and salaries, we reach to the profit of the year. So if you do like this in the final exam, you will get 1 mark, 1 mark, 1 mark, 1 mark, 1 mark, and 1 mark, which means 1, 2, 3, 4, 5, and 6. 6 marks for arranging the information. Okay? Then the second statement required from us is the financial position statement. If you remember, we learned last class the financial position statement for the sole trader, it will be as a vertical way. First, we have to put the asset categorized for both current assets and non-current assets. Second, we will put the capital and we put the liabilities. Okay? So let's start with this arrangement. Let's see what we have here. Now those items we have it is financial position items. Let me change the color of the pen and okay, I will do any green. Okay. Now you need to tell me each one whether is asset or liability. Fixtures and equipment, assets or liability or capital, which is owner's equity. So choose one of the 3, asset, liability, owner's equity. First, we start with the fixtures and equipment. Asset, liability, or owner's equity? Assets. Perfect, Nancy. So fixtures and equipment are assets. Then we go for the second one, trade receivables, assets, liabilities, or owner's equity? Trade receivables. Vikshwaran, good, is asset. We go to trade payable. Is it asset, asset, owner's equity, or liability? Trade payable, asset, equity, or liability? Liability. That is correct. Then, bank. Bank is asset, liability, or owner's equity? Yes, it's asset. Bank is asset. Cash is asset. Also, the land is financial position, but I forget to ask about it. It go to the financial position statement and is under asset. Let's go for the opening capital. Opening capital goes asset, liability, or owner's equity? Is equity. Good, Vikshwaran. Is owner's equity. Then we have the drawings. Is asset, liability, or owner's equity? Yes, good, is equity. So like this, you know each one of those items, how it will go, whether it's asset or liability, okay? Then first, as I mentioned, when we want to make the financial position statement, we need to do the arrangement. We put the assets as fixed assets, non-current assets and current assets, or current asset and non-current assets. You can arrange as you like. Then the second part, it will be the owner's equity and the liabilities. The first part should be equal to each others. So if we go to the second, if you see this second statement, okay. If you see this is second statement, I look how I arrange it. First, I put the non-current assets. If you see our statements here, the non-current assets, we have the fixtures and equipment. We have land. Those are our non-current assets. Those are non-current assets, the fixtures and equipment, and we have the land, non-current assets, okay? So those, we put them under non-current assets, the amount 15K and 30K. The total of non-current assets is 45,000. The current assets, we have trade receivables as current assets. Payables is liability, as we mentioned. We have the bank is current assets. We have the cash is current assets. So total of current assets, it's 12,000. So the total of assets is 57,000. So this number should be equal to this number, which is total assets should be equal to total liability. And all of us, we know it's very important. Actually, it's total liabilities and owner's equity. Okay, because if you see here, we put the the liabilities and the owner's equity. Okay, so this is a point. Then the second part of the statement, we put the current liabilities. If you see as liabilities, we only have the trade payables, which is current liabilities. So we put it here, the current liabilities, which is trade payable. Owner's capital, we have the opening capital. Also, we have to add the profit for the year. If you remember in the first classes, when we took the accounting equation, we mentioned that owner's equity is the capital plus the profit minus the drawings. So this is the capital. Profit, from where we take this profit? We got this profit, this one, we got it from the income statement. This one, we got it from the income statement, which is this number. Okay, so this number, it will go to the financial position statement. Okay, then we continue. As I mentioned, we have to deduct the drawings. As we know, is a capital plus a profit minus drawing. If you see how the deduction or the minus, how I put it in two brackets, okay? Then the total of this is 51,000 and 6,000, so it becomes 57,000. Those two should be equal to each others. Each one of these lines has its own mark. Like this, we finish this exercise, and this mostly comes with 16 or 17 marks in final exam. So do you have any question about making the financial statements for sole trader?